In this video, I'm going to be talking about 10 different things that beginner Forex traders do, which you should probably not do. My name is Adam Winnig, and I've been trading Forex for past 5 or 6 years. And I make this list of 10 things because these are all stupid mistakes that I went through as a beginner trader. And this is something that we notice happening time and time again across the hundreds, if not at this point, thousands of people that we've coached into becoming successful Forex traders. So you don't want to do these. The first thing that beginner Forex traders do is they believe that they're going to have success faster than they actually are going to have success. I remember when I first got started and started learning about trading, and I saw this idea, hey, if I could literally click a button, then I could make thousands of dollars. This was like such an exciting concept to me. And when I first started trading, I joined like this signal group, and I was like, wow, this guy's winning 70% of the trades. I could make money 70% of the time. And I thought that I was just immediately going to have a bunch of success Forex trading. And I didn't really understand what was all involved. So I think this is a huge mistake that I for sure made at the beginning, was not really appreciating the time and the energy that it actually takes to become a successful trader. And that leads me to the second thing that beginners do is that they're not willing to commit to trading as a career. Now, if you get really good at trading, trading can be an incredibly lucrative business for you. It can also be something that doesn't require a lot of your time. It's something that allows you to have complete time freedom, but most people don't really commit to it. They come into this, they say, hey, I bought this signals group, or, I bought this, robot or whatever, and they come into this and they think that they're just automatically going to have success. The reality is that in this market, you're competing against other really sophisticated traders. You're competing against hedge funds. You're competing against banks. You're competing against sophisticated algorithms. And so you really need to be able to commit to taking this on as a career. And if you do, it can be a very rewarding career. But like with anything, there's this 10,000 hour rule, right? If you want to become an expert in any field, you need to commit 10,000 hours. And so with trading, I think it's the exact same thing. If you want to become a real expert, then you need to commit 10,000 hours to doing this, which could take you 3, 4, 5 years of consistent daily effort, which most people are kind of scared of. The third thing that beginner traders do not do is they do not invest into their learning, which is, and yes, I mean that time-wise, but I also mean that financial-wise. And the reason why I think it's important, and I'm not saying, you have to invest with us or whoever, invest with whoever you want to, but it's going to allow you to, in the long run, probably lose a lot less money. Because if you think, hey, I can invest, I can start my Forex trading account with $2,500. Great. And you think that, or I could go and I could, invest and actually learn from somebody that's been doing this for 5 years or 10 years. And I can invest that same $2,500. If you're a beginner, I would beg to assume that the money is going to be better invested by betting into yourself and betting into your skill set than betting on any set of trades. And it's just the reality. Beginner traders, a lot of the times, they may have a couple, winning trades right off the bat. We call this beginner's luck that gets them hooked. But the reality is you're probably going to lose that $2,500 if you've not gotten some sort of professional training and you're heading into these very competitive markets. So that's the third thing, is they don't invest into learning. The fourth thing is that they strategy hop on losing streaks. And this is maybe one of the most painful things that we see in our communities is, we provide traders with strategies that are proven. We even provide traders with robots that are proven, that have worked, for literally hundreds and hundreds of people. So how is it that if we give people a winning strategy, how come they can't have success with it? And the answer is because people strategy hop or system hop when they go on a losing streak. And that's the reality. Eventually, you're going to go on some sort of losing streak where you're going to lose a handful of trades and it's going to be painful. And during that handful of losing trades and that painful losing streak, you're going to want to system hop. You're going to say, this strategy or this system doesn't work. I'm going to go and I'm going to try something else. And I see this inside of our communities all the time, of people that will hop from a working system because it's on a losing streak. They'll hop to another system just to catch a losing streak, and then they'll hop back to that strategy that they're trading the first time. And so this is the fourth fatal mistake that beginner traders do, is they system hop. The fifth thing is that they trade too many different assets. And I remember I was guilty of this too when I first got started. I pulled up in my market watch on my MT4 and I saw that there's 30 different assets that I could trade there. And I was just looking for setups across a whole bunch of different assets. And the reality is that all of these different currencies are going to move at different times based on when their bank is open and when volume's actually going to be in the market. So if you're trading all of these different assets, you're never really going to get to learn how one asset specifically moves and at what times it actually moves. So you're kind of just shooting yourself in the foot, even though you think you're finding more opportunities. The reality is that the markets move differently at different times and different pairs move differently. And that leads me to mistake number 6 that beginner traders do is that they trade at different times. This is really important because if you want to create consistency in your trading, then you need to create consistency in your habits and consistency around your strategy and consistency around your routine. And so it's best if you can stick to a routine that, hey, I'm trading for, an hour or an hour and a half, right at the New York Open, or I'm trading an hour and a half right at the London Open. These are the best times to trade because this is when there's the most volume. But the other major benefit is that you'll learn how specific pairs trade during these specific times of the day. And you'll notice patterns starting to repeat itself time and time again. For example, if you're trading Euro US dollar, generally, a lot of times you're not going to see a lot of volume during the Asian session. So if you're trading one day, you're trading, at New York Open, and then the next day you're trading in the evening, and you're in the Asian session, you're going to get totally different behaviors in these assets. The 7th big mistake that beginner traders do is that they rush into live accounts too quickly. They don't take the time to back test their strategy. They don't take the time to trade on a demo account, and they just get so excited. I found this signal group, or I found this guru, or I found this bot, and they just jump right into a live account. And people don't have the patience to actually trade a demo account. So they rush into these live accounts too fast. And before you know it, things are going wrong and they wish they had tested this system on a demo account prior to going live. The number 8 mistake that beginner traders make is that they trade with too much size. And I know this, for example, for me, some of you guys may laugh at my story, but when I first got started, I funded my account with $10,000. I got on with this trading guru that I was trading oil one morning with. I was so excited about it. We get on there, and in literally the matter of 4 hours, I lost my entire $10,000 account because I didn't understand position sizing. And if you are finding yourself being emotional about your trading, or you find yourself constantly having to check your MT4 app, then the chances are you're trading with too much size. If you can't sleep, or if you have to wake up early in the morning, then the chances are that you're trading with too much size. Number 9 is that beginner traders don't back test or practice their strategy. And sure, it's great that, you may have got this strategy from, some YouTube guru or whatever. But the reality is, if you don't take the time to actually back test the strategy and practice over historical data, then you're not going to understand what to expect from the system. You're not going to understand what losing streaks could look like. You're not going to understand what winning streaks could look like. You're also not going to be able to execute the strategy as well. And back testing and practicing the strategy allows you in the forward market to see these setups happening better and being able to execute on your actual strategy better. The number 10 thing that beginner traders don't do is they don't watch this video that's popping up on the screen right now, which are 10 different Forex tips to becoming in the top 1%. I went through and I studied a bunch of successful traders that are in the top 1% of successful traders, and there's 10 common things that these people do. These are the 10 things that beginner traders do. These are the 10 things that experts do. So watch it now.